The supply of Apple's latest smartphone, iPhone 13 series, which is gaining huge popularity worldwide, is expected to decrease. According to Bloomberg's report, Apple changed its original production target of 90 million units by the end of the year and lowered it to 80 million units. Even now, orders for the iPhone 13 series vary from model to model, but we are concerned that it will be more difficult to obtain products at a time when it is delayed by about a month, and the reason for the production reduction is the lack of parts supply. In its second quarter earnings announcement, Apple once mentioned that if the global semiconductor supply issue is prolonged, iPhone and iPad production could be affected from the third quarter. These concerns have become a reality, and Apple's stock price has also entered a downward phase as investors continue to sell stocks feared to see a drop in sales and operating profit as it failed to avoid semiconductor supply shortages. Smartphones are also created as finished products through a combination of numerous parts, and if even one of them is insufficient, production becomes impossible. Parts affected by the current supply shortage are known as Display Power Management IC, USB, Wireless Power Receiver, Face ID Laser Array, and LED Flash Driver. Broadcom and Texas Instruments are the suppliers of the parts, and the iPhone 11, iPhone 12, iMac, MacBook Air, and iPad Pro, as well as the iPhone 13, have already been affected by delays in shipments for months. So far, Apple has been regarded as a leading global company with the strongest purchasing power and enormous pie in the world. That's why most parts suppliers supply parts to Apple, the largest customer, but if they are suffering from a shortage of semiconductor parts, I think they can see how serious the situation is and how serious other manufacturers' situations will be. Meanwhile, there was also news that refuted Bloomberg's reports. According to a report by Taiwan's Digitimes, Apple has not reduced suppliers' parts orders for the iPhone 13 series, but the fact that it has not reduced other suppliers' parts orders may not be temporary or worrisome. However, it is expected that it will be difficult to find a new Apple product for the time being, even if the supply shortage is temporary, as some models of Apple Watch 7, which will officially be released, continue to early December, and the delivery delay period of the iPhone 13 series has not been reduced. There is also a possibility that Apple will not reduce orders for other parts but maintain orders from other suppliers to hold inventory because of how long the shortage of semiconductor supplies will last and the possibility of spreading to other parts. Currently, the semiconductor industry diagnoses that the global supply shortage problem is unlikely to be resolved even after next year, and some predict that it will continue until 2023, so it seems difficult to expect that the situation could improve in the future. As a result, consumers are not able to receive Apple products on time, and for investors, Apple is on the verge of falling sales and operating profit in the fourth quarter, creating a situation where the future is not bright in terms of investment prospects. Apple suppliers Broadcom, Nasdaq, AVGO, and Texas chip shortages plan to reduce iPhone 13 production to 10 million units. Apple's downsizing is a clear sign of worsening supply disruptions that have disrupted the world, which could jeopardize prospects for a post-pandemic economic recovery. Almost all major manufacturers were affected by a lack of core materials such as semiconductors and the inability to get finished products into the hands of consumers. Apple expected to produce 90 million new iPhone models this year, but now Broadcom Inc. and Texas Instruments Inc. are struggling to provide sufficient components, so they are telling their manufacturing partners that the total will be lower. It is identified because the situation is private. This may mean that iPhone 13 sales may have less impact on Apple's finance next quarter than analysts expect. We don't worry about short-term noise related to Apple given our solid and stable finances. Analysts expect the company to generate $366.6 billion in sales in FY21, up 34% year-on-year. Gross margin and operating margin have been stable at 38% and 24%, respectively, in recent years. Wall Street analysts and we expect FY21 to see a 41% to 42% and 29% to 30% increase, respectively, which emphasizes Apple's ability to reduce costs as sales growth could slow down in the future. The company's net profit ratio has been constant at about 21% to 22% over the past 3 years and is expected to rise in value in the future. One way to measure how Apple is making profits from its vast iPhone installation base is to check the revenue of the service sector consisting of App Store, cloud services, music, video, advertising and payment services and Apple Care. In 2020, as soon as total service revenue came out, it was $53.8 billion in 2017 as well as 2017. Apple's financial manager, Luca Maestri, said its service sector would be, while setting its sales target, the size of the top 100 companies in YouGov fortune. The $50 billion sales target he proposed at the time has now been exceeded. Nevertheless, this figure is smaller than iPhone sales amounting to $137.8 billion, but the trend of smartphones has been irregular, especially due to the influence of COVID-19. On the other hand, service revenue has continuously increased by 16% since 2018. Apple's service revenue in the third quarter of 2021, or the 3-month period ending June 26, was $17.50 billion, up 33% from a year earlier. News about Apple's supply problem will lower Wall Street analysts' estimated earnings estimates. This can reduce expectations for Apple and surprise us with the company's upcoming quarterly announcement. Apple stocks have been sluggish in recent months, and short-term concerns could further reduce stocks. In this situation, we believe that considering the company's long-term trajectory, investors will have a good buying opportunity. Investment topics tend to last longer than people think, and despite Apple's tremendous success in the past, we think the company remains in the tank a lot. Smart investors should consider purchasing Apple today. First of all, the reason for concern is that regulations cannot be avoided in the short term. Currently, Google and Apple are being criticized the most because of the system that forces in-app payments. I brought a fee by forcing in-app payment without an option, but I'm trying not to force it. In addition, the NFC function of the iPhone has been restricted to be connected only to Apple Pay except for other financial services, which is also a monopoly and market control, claiming that it is a violation of the antitrust law. As such, Apple is currently under all-round antitrust pressure. Furthermore, it is not just the United States, but the United States and Europe are pushing for it. At the same time, so it seems difficult for Apple to avoid pressure. However, in the long run, I have a bigger positive outlook because of Apple's strong influence in the game industry and its vision to build a new ecosystem called CarPlay. Apple's game operating profit is worth about 10 trillion won, much higher than game developers Microsoft, Nintendo, Sony, and Blizzard. Even when those companies were combined, Apple had more operating profit. We believe that this much operating profit was possible because more people used mobile games, more than half of them used iPhones, and it was an environment where they had no choice but to pay for the App Store in-app. What's even more surprising is that Apple has never developed a game. We are also working with automakers to develop a new CarPlay system that can control car air conditioners, seats, and speakers with iPhones. Currently, the CarPlay system can only manipulate mobile apps such as Spotify, which I think is a plan to expand to the experience of real people manipulating cars. Currently, it is in the form of collaboration with automakers, but I think it is planning to accumulate data here and install more advanced functions in Apple cars in the future. We can grow further as Apple's ecosystem is now expanding from computers to smartphones and wearables to automobiles.